From our Midtown Atlanta studios, this is 11 Alive's Weekend Morning News, where we help you get ready for the weekend.
A few days ago, market observers were speculating about when the Dow Jones Industrial Average would close above 12,000. Then yesterday, the market dropped 166 points, the worst slump since November 15th. So what's the deal? Here to help us sort it all out is Emily Sanders from Sanders Wealth Management. Emily, thanks so much for coming in this morning.
Good morning, Val.
How are you speculating about the unrest in Egypt and how that's going to affect the market?
The unrest in Egypt is caused by 30 years of the dictatorship of Mubarak, who is an ally of the United States, as well as severe food inflation that has hit that part of the world. Now, there was 17% increase in food prices and also very high unemployment. So there's unrest among the youth. 20% of the population is unemployed, and they're lobbying for the ouster of the dictator or tyrant, you could say, Mubarak, who's now closed off all communications like the internet and so on.
Is that enough, though, to affect the change in the stock market that we're seeing?
Well, yes, it is causing some fear of contagion of other Mideastern countries, and also Egypt is a gateway to the Suez Canal, which much of the world's oil goes through. So there is about a 10% risk premium on these global crises, and oil could go from about $90 to $100 a barrel if the unrest continues.
So are we still headed toward 12,000, or do you see a correction coming up soon?
Well, we are due for a correction because in December and January, the Dow increased by leaps and bounds, really more than historically normal, even though January is usually a month for a lot of inflows into stock mutual funds. So it's time to take a pause here, and the global unrest was really the catalyst.
Now, as far as the overall economy goes, we have seen the stock market come back very well in the past couple of years, yet the overall economy not so much. Jobless rate is still very high. Are you saying that the market is still well ahead of the recovery?
Yes, it's very well ahead, and that's largely due to the Fed issuing quantitative easing, the second round, where they're printing about $600 billion of money or buying treasuries that they're injecting into the economy. So that is lifting the stock market more than usual. And people who have 401ks and so on are really enjoying that, but there's still almost double-digit inflation, unemployment, 9.4%, and it would take, at the current growth rate of GDP, about 3% growth rate, it would take about 4 to 5 years to recover those 8.4 million jobs that have been lost back in 2008 and 2009.
So it is going to take us a few more years.
Yes, unfortunately.
All right, Emily, thank you very much for coming in this morning. Always good to have you.
You're welcome.